For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. G'day, trader. Stacey Burke from Stacey Burke Trading. Today we're talking about the first bounce trade. Now, a couple things we're talking about today is the first bounce and the inside bar. Coming back to crude oil, it's been giving textbook perfect charts. And we had our 3 peaks. Yesterday we went and reviewed that into the US Open. Again, 3 levels of rise, 3 peaks inside of the previous day's low. They lift the price up and start the launch with a space underneath. Asia, London, and then New York. 1 push, 2 push, 3 pushes into the lower high. We had the opportunity for the first bounce yesterday after the news. Pin hammer, the trade direction was down. We had other lows off to the left of the screen from the previous week's swing lows, daily lows, which become significant levels potentially. Today we're talking about the first bounce. So the same principles apply. I said yesterday in yesterday's video, pay attention to how they close the market. They pump it up. They pump it up and they keep it up there and they pump it up. So some traders are going to get caught trading this with the peak formation. There's still, even on oil, there's 25 pips. The market goes into consolidation, but we get our peak formation high, peak formation low in London, and then our second peak. So again, my thesis is always I'm looking for 3 peaks away from the low of the day. We're in a broken down market. Again, we talked about front side versus backside. We saw a front side move broken yesterday, but they continued to go lower. So we redraw that because the front side is still in play. And as we speak, they're just coming back to that level now. We had CPI on the calendar. We broke through the previous low from the previous week, the daily low. Put a new low of the day, low of the week in place, and we start our 3 peaks. 1 peak, peak formation low, and so there's our day 0 setup. I'll just go through that again briefly. Peak formation high, peak formation low at the low of the day in the new session. So somebody again asked, why do I only count those? Because I'm looking for peak formations that are in the 12 candle window. Peak formation low, peak formation high, and a vertical explosive move. That puts our second high of the day in place. 1 push, 2 push, it breaks structure and then works the low before launching back up into the peak formation high prior to our CPI. Now, as I've mentioned to traders, I don't trade the news itself. Obviously, if this was a normal situation, we would have had a short trade right into the open of the session. But we had the CPI on the calendar, and I step aside. And as you know too by now, the go-to trade setup on an explosive news candle is the first bounce trade entry. So on a first bounce entry, whether it's long or short, in this particular case, we had our 3 peaks, and the market, bang, explodes down. Now, what I look for in the first bounce is for that first 15 minutes or within that first 15-minute cycle to give me some sort of re-entry at numbers back in line with a new 15-minute candle in line with that original drive. And you've heard me say this before, especially on oil gold indexes. Do not counter trend. Do not counter trend that explosive move. The first bounce opportunity is designed for that carry through after the explosive move. We get counter trend traders in the market somewhere. They put a pin hammer in place and people go long thinking for some reason that all of a sudden the market's going to explode back. They roll over and lo and behold, it keeps going. And this is easy money. And on some of these trades, it can be 100 plus pips. And if it was possibly a Friday night, we could see this roll over and keep going and close at the low of the day. But in this particular case, we hadn't got into the New York Open, looking for the first bounce opportunity after an explosive CPI, core retail sales, news release. So when we have the news candle come out, we can see that the market was already in rollover. So again, if this was a normal situation, there was already a short trade in progress, meaning that right off the start on our 3 levels of rise, heading into the U.S. session, we already had a short trade in process in that first hour for traders who, again, if you're trading this on a normal situation, this would have been a nice continuation move down. We had low-hanging fruit all the way down, and we had our 3 peaks. But coming back to the first bounce, this market traded down for the 30 minutes. So we're half an hour into the situation. The news candle blows off, and then we get our 3 pushes as we head into the end of that second 15-minute candle at 50. And again, some people's charts may be a bit different. Doesn't matter. But this was an easy 70 pip blow off, similar to yesterday's trade. Again, we've had several first bounce opportunities, and again, shutting it down, looking at the New York Open, getting out of the market, and then waiting for the New York Open. This market put a low in place. It put a low in place. So again, understanding break in structure, higher high, the creeping trend sideways underneath. 2 easy, no stress trades heading into the New York session open. Right at the end of the half hour mark, we get our nice little V bottom reversal, then 1 push, 2 push, 3 pushes engulfment at 25, and then the pin hammer. The pin hammer is the last 5 minutes heading into the New York Open for the explosive 50 pip stop hunt through the low hanging fruit for the first bounce traders who didn't take the money. You're holding on to this. And again, for people who are struggling to see these 2 things, it's a simple concept. We're taking the first bounce, the first engulfment follow through. When this trade is over, that's it until the New York Open. Now somebody is going to definitely email me and say, how could you get in before the Open? Because the market coiled sideways and put a low in place, a peak formation low, and then broke structure and proceeded to trade back into it. 1 push, 2 push, 3 pushes, engulfment, pin hammer. That's the trade entry for me. The reason why is you need to understand that when the market opens and it's running away already, that means that traders at the open are forced to buy higher. And you'll notice that the stop hunt comes back into traders that buy as the market's opening up. I'm getting out with 50 pips. So that's an actual setup. The news blows off. I'm going to repeat a phrase. First hour puts in a high and a low. The second hour trades back into the low. That's called a short squeeze. This is a trading setup. And then I'm done. I walk away. That's 2 explosive, easy trades. And for the trader who messaged me and said, that's all great in hindsight, 2 videos to watch. The one is that I just released last week, if you catch yourself saying this, and the other one is to go back and watch the last 50 videos where we talk about these exact same setups. What to do on a news day, how to trade the New York Open. Keep it simple. Let's take a look at the next chart. Now, the important thing to understand, somebody also messaged me and said, thank you for mentioning why you don't trade the news. They got burnt. And they also witnessed today, they've been burnt before, and they witnessed today how if you're patient, there's an opportunity in the first bounce. Now, looking at NASDAQ, we had day 1, day 2, so again, peak formation high, making new lows. We peak formation high, peak formation low, 3 levels. Yesterday we dropped down, went into consolidation. I thought potentially we could maybe get a short squeeze on the news, but I did not expect this explosive move. But what's important to understand about this trade down on the NASDAQ is coming back to our first bounce opportunity. You'll notice that this market dropped approximately 500 pips. The first bounce is down near the low of the day. It gave a 50 pip drop through the low. But when you're forced to take the first bounce after it's already gone vertical in 1 minute, almost 400 plus pips, 500 pips, you need to understand that now the volume is being trapped down low, and you'll, again, first hour puts a low and a high in place. Our peak formation is up though. So, again, the second hour opens up and they work into the low. New York Open, 1 push, 2 pushes, 3 pushes, explosive, break in structure, pull back, a 1, 2, 3. Again, the same patterns, 1, 2, 3, at the end of the 15-minute bar for an entry long for a 100 plus pip move back up. Now we have shorts caught down low, low of the week, low of the month, near the low of the month. If we're not at the low of the month, shorts are trapped. So for people who want to short this back down to the low, you have to be thinking to yourself, if you're shorting down, especially if you've shorted it up top, anywhere in here, it's not going down. But also, this whole block of volume has been forced to trade down low. They're caught. They can't get out. If they go back down, traders who are sitting right now in negative equity or in drawdown are caught. They're stuck. So they don't want to come back and let them out, because that means that losers can get out with either break even, small loss, or no loss at all. So again, 3 pushes into the low. First hour makes a high and a low. They make a lower peak formation high. They make a low. The second hour taps the low again. 1 push, 2 push, New York Open, 3 pushes, engulfment, break in structure. Our little W inside. Pin hammer, 1, 2, 3, pin hammer. And again, timing. 15 minutes, the new 15-minute bar, a little pin hammer, a little 1 bar stop, bang, 100 pips. So if you understand timing and you understand how you can use that to your advantage, and then identify, even after a massive move, the simplest thing I do is I just redraw my high, redraw my low, and I go back to the timing. What's next? We just had our news candle. First balance, if you did take it, you're forced to sell right at the low of the day. So if you didn't take any money off, you're up 50 pips, 40 to 50 pips. You're stopped out at break even. They work down into the low. 3 pushes at the New York Open, engulfment, reversal, explosive. And when they come out of this short squeeze reversal, you've heard me say this over and over and over again, and hopefully nobody has, but do not counter trend once they come out of the reversal, out of the squeeze. They will blow your account out. S&P, I just got to laugh because this has just been played out an explosive reversal and incredible. So talking about the first bounce, coming back to our weekly chart, and when I say weekly, I'm talking about our weekly template and our major quarter levels. We have our peak formation high Monday. Remember, we talked initial balance Monday, Tuesday, typically sets one of the extremes for the high and low of the week. We make a new low on Monday, a lower low on Tuesday, and peak formation high again on Tuesday, trapping volume short. This is our first giveaway. This is why I was potentially expecting maybe a short squeeze somewhere down low, not this big of a move, but again, this is why it's important to stay and wait for the news. We get our little gift yesterday, and we're going to talk more about this in future videos. The little gift is the inside bar, and NASDAQ also did the same. We have our inside bar, and this is a precursor often to understanding where this may go and reverse to, because as soon as they trigger one of these sides of the inside bar, and immediately prior to a news release, we now potentially have longs in the market who are trading the break of this high. And inevitably, in most cases, whether they're longer time frame traders or even breakout traders, hypothesizing that this is coiling for an explosive move, again, Can't trade for me because it's on the news, but they will have their stops beneath. Now, for the traders who maybe did trade this long, and they say, well, I had a stop in place. If they traded prior to the news, I can almost assure that they may have had a platform freeze on the news, may have had their stops below the low of the week because they'd already just basically triggered the low of the day on the S&P in London before coming up and triggering the high of the day and pulling back. But this large candle, some traders may have gotten in just prior to the news. Again, extremely risky, but spreads may have widened, all of that sort of scenario. But you may not, this 1 minute candle, although it may appear it just kind of came down for 1 minute, they may have came down 75 pips, which means they've pulled all the bids out of the market, which means your best case fill, even if you had a 50 pip stop, was going to be 75 pips. So again, coming back to the understanding of, that's great, you might have got some pips, but how much size could you actually risk putting on a candle, a news candle? And again, the question I have is why? Why would you do that when there are plenty of great trade setups, just taking simple setups after the news? So again, in any type of situation, I'm not suggesting that each one of these is a best trade setup scenario, but the first bounce opportunity, depending on the timing. So again, a large candle I won't necessarily take, but I will take one when we start to follow through. But when I don't get that in the first 15 to 30 minutes, especially as I'd already taken the oil trade, it doesn't mean that every single pair is going to trade and give a perfect setup. But what I will reiterate with absolute 100% certainty is that if you get in, make sure that you are in the direction, the initial direction of that explosion after you have a valid reason for entering that market. So for traders who did chase this candle, even though it closed below, I'd rather follow one that pulls up and then engulfs back down through the low on the first bounce. Again, I've talked about the first bounce is the only bounce I will take, because as we get further along, and again, this is a classic example, we're getting squeezed down low. That first bounce still gave traders 50 plus pips, following through with that momentum. And you'll notice that this candle ends the 15-minute cycle right in that last 1, 2, 3 is the beginning of the new 15-minute bar. So first bounce, again, not necessarily when it moves this much, I get very, very suspicious that now we're setting up for a reversal trade opportunity. And you need to be thinking about the time. It's New York Open, 9:30. So we're going to be a minimum of 15 minutes in most cases, locking that low in. And in some cases, we may get 3 pushes in the last 15 minutes of the hour. Again, we've had a news candle. And the New York Open can open on a pin hammer. But again, pay attention. What time was this? This is where the hindsight people are just lost, and they have no real objective to, learn something besides, what little bars are doing back and forth, but paying attention to the clock. Pay attention to the clock. New 15-minute bar starts, 3 pushes, engulfment, break in structure, 1, 2, 3, pin hammer, new 15-minute cycle, bang, an easy 100 plus pips. I want to just highlight again the inside bars, inside bar consolidation. We talked about this. We had Fed. We talked about this yesterday's video. I won't even touch days like this, especially prior to the Fed. There's a very, real reason why. But we didn't see that completely show up until today. We get a massive capitulation. We get a high of the day opportunity after the news at the New York Open on the Canadian dollar for an easy, even on the 15-minute chart, 75, 100 pip move. So these are the sort of things as to why people see this and they go, I missed out. I knew it was going up. I should have took that. There was a pin hammer here. That's your choice. You can take these trades. I've seen enough damage over the years that I'm quite happy to wait for the news and then take the New York or the first bounce opportunity. But in a case like this, with the major currency pairs, in most cases, high of the week situation, and we're in a peak formation format. Day 1, day 2, day 3, inside bar. Guess who's caught in the market now? So inside bar traders may have been long into the open of the session, and if they haven't taken any money off the table, guess where this market might be headed? And not today. They may drop it down and pull it back and coil this, or we may see it take out the low of today, trigger both sides, hit the stops, pull back, and roll over. We have peak formation low on Wednesday, day 1, right? Remember we talked about markets that put a peak formation in and trap volume below the previous day's low or high. Now this market has gone up and then trap volume below and gone into consolidation sideways. We can follow that across. Inside bar, explosive move, day 3. Day 1, day 2, day 3. Guess what? We may be seeing the beginning of a new cycle targeting the day 1 low. No idea. I'm not saying it's a trade recommendation, but I'm talking about understanding inside bars, breakout traders, and even if this was going to work for inside bar traders, when we get our opportunity up top at the New York Open, again, for the people who are hindsighters, what time does New York open? 9:30 New York, for an engulfment, for a move all the way back down against, it could have failed somewhere in this area. 1 push, 2 push, 3 pushes, and resume the move up, because we have breakout traders in the market. So whenever I'm in a situation like that, I'm always watching how the market would behave when it approaches back to that breakout level. So let's take a look at this on a smaller time frame. We get our pin putting in a high. We get our trap volume in the upper quarter. We get our 1 push, 2 push, 3 push New York Open. So again, the New York Open candle, as it's closing, we get 3 pushes into the high. High of the day is above 50. And traders who again struggle with where to get in, I get in. I just get in and I put my stop in place. I want to get filled once I know that high's locked in after the open of New York. They break down and pull back inside of those peak formations, which are up into the peak formation. We got trap volume up high. All it has to do is break this neckline. And now I know we're in for 1 push, 2 push, 3 push, possibly free fall, at least into the breakout traders. And you do not want to counter trend the move down. Peak formations are up. Peak formation is up. It breaks down. 1 push, 2 push, 3 pushes. Consolidation sideways underneath the peak formation. Underneath the peak formation. So if I'm going to just hammer home on some of these people. I need you to ask you, which way is the peak formation? Don't counter trend it. Consolidation. This is going to rifle. Remember, I've mentioned this. When it goes sideways above the low, inside the peak formation, it's coiling. That's called a coil for an explosive move. Do not counter trend the peak formations. After the news, they put a high in place. They bring us up for 15 minutes into the high of the day. New York opens, breaks down, pulls back, drops down again, pulls back a third time. The end of the first 15 minutes before breaking down. New hour, 1 push, 2 push, 3 pushes, peak formation, consolidation, explosive move. So you can go and review your other pairs. Again, we had inside bars on New Zealand dollar, Canadian, Aussie dollar. The pound was not an inside dollar, but we talked about this potentially going through yesterday, and it did not. It pushed up and then dropped down inside, so I look for my 3 peaks. There were traders that would have went long in the London session, and for those of you who again are looking in bewilderment because you actually don't have trading setups, I want to go back and mention this. British pound. I know it sounds arrogant to people, but I'm going to hammer it home. If you don't have setups, you don't know what you're doing. Peak formation high, peak formation low, and just paying attention to the numbers, double zeros and 75. This is the day 0 setup. Peak formation high, peak formation low, in the session windows: Asian peak formation, London peak formation, consolidation, breakout. That's the trend trade setup. Peak formation high, peak formation low. And for the people who are convinced that their guru thought of this a few years ago, go and read classical charting. This is a rectangle. That's a rectangle. As Peter Brandt would say, the breakout of that rectangle then could proceed. And this is just purely amateur chart drawing. At least 2 times expansion of that range as a potential target. We have now hit a third and approaching a fourth. And obviously on a larger macro scale, we'll just drag this out. We can be using the previous day's high and the day's low as a possible area for measured move. And we now are hitting the third expansion of that range. So just little simple tools, keeping it simple and waiting for the specific timing windows. Euro, very explosive move. Not technically quite an inside bar, but as again, the same principles apply. They triggered, I talked about this yesterday, that they may trigger the upside first. I thought they would do this on the Fed, not much of a reaction. So there's your first clue. We broke the high first. And again, this is prior to the 12 candle window. So, I don't know what to say. Higher highs, peak formation, pin hammer. On a normal day, there would have been a short opportunity in there. But we have news. It blows off, takes out the low after triggering the high of the day. Goes all the way down. This is still going. That's unbelievable. New York Open, pin hammer, reversal at the low of the day for a short squeeze. It did eventuate into a short squeeze as I thought it might, but just bigger ranges and an explosive move. New York Open, the continuation. Do not counter trend the peak formation. The peak formation was made in the US window down. This is not the peak formation. This is the high of the day for London. They come down in the window on the news, put a peak formation low in, 1 push, 2 push, pin hammer, 3 pushes for the explosive short squeeze back up through the high of the day. Go mark up your charts. Understand you don't need to be at the screen all day long trading these moves. When there's major news on the calendar, there are some simple explosive moves that can be over quickly. You have to understand what you're looking for, and you need to be prepared. You need to be able to manage your risk and lock in your profits, not get in hope mode and hold on forever. It's about locking it in, getting the money, and then walking away from the screen. You're not trying to trade all these zigzags and all these other names that people put on these charts. Have some simple setups. There's an entry, a stop loss, and a profit target. Is it reproducible, or was it just you getting in on a move and catching some pips? Simple, repeatable, rinse and repeat patterns for high probability, explosive moves that can be scaled up in size. Have a great day, traders. One more day in the trading week. It's been a very good week. A lot of traders have had quite a bit of success. Keep it simple, stay off the screen, and may the markets go with you.